Hi everyone, welcome to Thursday, where of course we take a look at a share and review. Today we're going to take a look at Vista Group. Now this was a share that I held up until last week, and I want to show you what actually happened and why a stop loss is really important. Now, just remember that this is for educational purposes only. It's the methodology that I use when I'm trading shares, and I want to teach you how to protect yourself and protect your capital in that as well. So let's jump across and take a look. But if you're looking for personal financial advice, just remember you do need to go and talk to your own financial advisor. Right, I've got Vista Group up here on the screen, and I've got this over a 5-year chart. And from a stand back and look point of view, it was a very healthy looking share. You can see that there was a really good breakout here. You can see that very clear gap, and that was around the end of May last year. And if you look down the bottom, that nice healthy green candle there, that was a big volume breakout, which was really good. Now, when you see signs like this, quite often it is an indication that a share will keep running, which is really good. Now, this one didn't appear sort of on my radar list until around February this year. And I ended up purchasing it the week beginning the 2nd of February. And sure, that was a down candle there. That didn't matter. Very little volume. So it doesn't worry me if a share falls, because it does quite often happen initially, as long as there's very little volume on it. The next week was a very small positive week. Nothing stellar, but then we had a very strong candle the following week, which was great. It was certainly looking like it was going to be positive. Obviously hit a high up around that $4 mark, and then sort of fell and meandered sideways. But if I zoom in, look what happened last week. That is quite a drop in that particular share. And that was when I got hit out. Before I show you the stop losses, I want to show you the comparisons and things that I make. So first of all, I want to look at how the share is comparing versus the main board. Reason for that is because Vista Group is trading on the main board for the stock exchange. So this pink line down the bottom, that is indicating where the main board is. And you can see that Vista Group for quite some time, basically since around May, end of May 2023, it's been trading above the main board. So it's definitely been a performer to the main board, which is really good. We want to see that. Okay, we want to see that, in my view, for at least 5 weeks in a row. I wouldn't want to be trading it if it was sort of around this period here, which was sort of March, April 2023. Right, let's take that off and we will pop on our moving averages. So like normal, I always use the 30-week exponential, and I also use the 15-week moving exponential. Nothing magic about these numbers. These are just what I use. And if you're going to use this as well, make sure you're consistent and using the same 2 combinations. Reason for that is because if you keep chopping and changing, you're going to get different results all the time. Right, you can see here that Vista Group has been trading above both of those moving averages, which is a very, very good sign. But you can see here that both of those moving averages have now started to turn towards the downside. They haven't yet crossed, but Vista Group is trading below them. So that is something that we need to take into account. And obviously for me, when I was writing this share up, sure, I only bought it earlier this year. It was, as you can see, it was trading above both of those moving averages, which is what we want to see. If I pop it on a 1-year chart, it brings in the weeklies. So I purchased this share at about that candle there. Okay. At that time, I bought it for $3.34. And you can see here, we end up having a very good, strong run. And I thought, great, this has certainly got the promisings for being a top performer. And like I said, it did top out at that $4 mark. Thereafter, it started trending down and went through a sideways pattern. And you can see these moving averages keep crossing above and below one another. Now, that doesn't concern me, because once I've already put my position in the market, I use my trailing stop loss to take me out. And you can see if I move this along, you can see how basically the last 5 days of this share, which was all of last week, it has just completely fallen and almost fallen off a cliff. Why, I don't know, because I don't go and look for the fundamentals as to what's happening in a share. I certainly only look at the charts, which is the technical aspect. Right, let's go back to the 5-year chart and we will take those moving averages off. And this time I'm going to put on the ATR trailing stops. Now, I always use a 21 period and I actually multiply this by 4. And you can see by the green underline here, this is where your trailing stop would be. And as the share moves up, so does your trailing stop. Now, for me, I entered it on this red candle here. So you can see that my trailing stop, if I just hover there, it is around $2.58. Now, as the share moved up, you can see that this green line jumped up quite a bit. Okay, and that's where my stop loss would be. So it went from about $2.60 round figures up to around $2.98. It then jumped up again to $3, $3.11, $3.12, and that's where it stayed. You can see if I zoom in, actually I'll just change that color. So I've made it blue, which makes it a little bit easier to see. So you can see there that it went sideways, and then this last little candle over here, which was last week, it hit it. And that's what I mean by it sold me out, because the moment that share hit that trailing stop that I had placed on the share, it took me out of the market. Sure, I ended up selling this share at a loss. I ended up selling it at about 22 cents loss, but that's what stop losses do. They protect your capital and take you out of the market at a predetermined price. What I find for me is I've already worked all of this out before I buy a share. So it takes out any emotion. It means that I'm not going to be second guessing as to, oh, maybe it might recover. It's a good share. It'll come back. All of those emotions that do tend to run through. For me, this happened when I was doing something completely different. I was well away from the computer. I can leave it, I've set it in place, I can forget about it, and then I just receive an email notification to say that it's actually happened. And that's why, to me, it's really, really important to do this, because I have seen shares, and a good one that I have seen is Synlait. They went from $4 something down to a few cents, and that's where they're trading at the moment. So if you have a predetermined sale price, and if the share's moving up, great, move your stop price up each time the share moves up. I do it on a weekly basis, and not every week there's a move. But by having that, it means that you're not going to ride like a Synlait share from $4 something down to a few cents, which is 90% of your capital. So for me, I've only lost 22 cents per share. Not a game changer. No one likes losing money, and I completely understand that, but it means I've still got capital left. It means I can go into something else and apply the same methodology, and that next share might be an absolute stellar that may give me 2-3 times return on what I actually paid for it. So that's what a stop loss does. So that's why I wanted to show you that. It was a real live example of a share I owned. Like I just said, I was taken out of it last week. So I really hope that's helped. If there is anything else you would like to know on the share trading, or if there's a share you'd like me to review on your behalf, by all means, reach out, pop it in the comments or direct message me, and we'll see what we can do. So until next week, take care.